Right. So coming to the next one, audit planning, strategy, execution. So again, if you can check it from the study material of the ICAI, right? This is the particular MCQ, the case study that we are discussing. Anuti has been offered appointment as an auditor of an NSE listed company. She had already ticked the check boxes relating to her independence vis-a-vis company, integrity of promoters and KMP. Being satisfied on this count and after sending a formal engagement letter to the company, she is in the midst of planning activities for company audit. Owner of country is one of the topmost writing instruments brands. Above said company is in the business of producing the ball pen, gel pen, marker, folder, and such general stationery products. Business profile of the company, including its brief history, details of the KMP, and the brief description of the company activities, was obtained by her. She has also studied reports relating to the growth of India's stationery market due to greater demand and impact of the government-driven schemes like the Sarva Shiksha Abhiyan. Besides, she has also obtained risk management policy of the company, which contains detailed company strategy to contain various risks. On perusal of the financial statements of the company, it is noticed that company's inventories as at the close of the financial year stood at 200 crore, which constitutes about 25% of its total assets. She is planning to identify significant audit risks pertaining to the valuation of inventory. She is also considering about materiality level for the financial statements as a whole. Okay, right. So now when she is looking into the yes independence, then the integrity of the promoters, then the formal engagement letter, then also looking into the business profile of the company, details of the KM3, brief description of the company. So basically what she is performing over here is performing the preliminary engagement activities as given in the SA 300. And under the preliminary engagement activities, one of the preliminary engagement activities is to check for the the preliminary engagement is to check for the acceptance continuance of the client relationship, in which you have to check for the integrity of the client. Right? You need to check for the integrity of the client. Right? Then after that, do you have the CCTR, competence, capability, time and resources, and also whether auditor you can comply with the ethical requirements, including the independence, then also send the engagement letter. Right? Then the preconditions for an audit, acceptance, continuance. Okay. Right. Now, based on the above, answer the question. The compliance with independence requirement and the verification of the integrity of the promoters and KMP has been ensured by Anuti. In this regard, which of the following statement is likely to be a complete statement? Such activities are required to be performed strictly in terms of the requirement and the procedures outlined in the Code of Ethics issued by the ICAI. Such activities are required to be performed in respect of an audit engagement in accordance with 220. And these preliminary engagement activities are given in 210 engagement letter. Mm-hmm. Required to be performed in respect of audit engagement in accordance with 220. Yes, acceptance, continuance of client relationship. And these preliminary engagement activities form part of planning of the audit in accordance with 300. Such activities are required to be performed in terms of the requirement and the procedures outlined in the Code of Ethics and specifically identified in 210. No 210, no Code of Ethics, it is 220 and 300. Okay. Auditor has obtained the risk management policy of the company. Which of the following statements is most appropriate in this regard? Understanding of company's risk management policy is required by the auditor. It may help the auditor to identify the RMM that management failed to identify. Understanding of company's risk management policy is not required by the auditor. It deals with the business risk of the company. Audit risk is not influenced by company business risk. Oh my God, inherent risk comes from that only. Understanding of the company's risk management policy is required by the auditor. However, it cannot help the auditor in identifying the RMM that management failed to identify. Understanding of company's risk management policy is sufficient for an auditor to develop an audit plan. No, he has to do the risk assessment on his own also. So understanding of the company's risk management policy is required by the auditor. It will help the auditor to identify the RMM which the management has failed to identify. Which of the following is not likely to be a procedure performed by the auditor to understand the company? Online search to identify the press reports relating to the company, review any new SEBI or stock exchange requirement, review whether any fresh monies were raised from the public. See, confirmation confirmation letter from the bankers. Oh my God, that's not a part of KOC. That's a part of your. So, which of the following is not likely to be a procedure? B. Seeking confirmation letters from the bankers regarding the outstanding balances. Considering auditor's intention to identify the significant audit risk pertaining to inventory valuation, which of the following statement is likely to be true? Procedures plan to identify the significant audit risk pertaining to inventory valuation forms part of the overall audit plan. Procedures plan pertaining to identify the significant audit risk pertaining to inventory valuation forms part of audit strategy. It forms part of POC. It forms a part of TOD. So not POC, no TOC, no TOD, not audit strategy, but the audit plan. Right? In a part of, so accordingly, you identify, assess the RMM, and accordingly decide your further audit procedures in the audit plan. Okay. In relation to the materiality levels for the financial statements as a whole, which of the following is most appropriate? Materiality has to be decided by auditor after identifying, assessing RMM. So if I have to assess RMM, material misstatement, I should first have to know the materiality. Materiality has to be decided by auditor prior to identification assessment of RMM. Materiality has to be decided by auditor after performing risk assessment. Materiality has to be decided by auditor at the time of designing POC and substantive. What is the title of SA 320? Materiality in planning and performing an audit. So even before you plan your audit, do you need to determine the materiality? Yes, right? So B would be the correct option. Right, so we see like this one question is regarding the 320 materiality, right? Then after that there is a question regarding the audit risk, right? So audit risk, audit planning, right? So identify risk as a part of the audit planning. Okay, right? Then also regarding the KOC, so that is SA 315, understand the entity and its environment. Then again risk management policy, which will help you to assess the RMM, so that is again 315. And the first question is regarding the preliminary engagement activities, right? So mainly we see the question regarding the 300 series over here.